Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, March the 14th, the year 2019. Let's talk trading. How to trade like a pro. Breakout 440. Okay, this week we've done the basics. Then we went into 201 and looked at breakout trades in a little more depth. Then in 301, we looked at the breakouts from a statistical standpoint, how to select better trades, better trading opportunities, I should say. The ones that are statistically will yield the best chance for profit. Now, in 440, what we're going to discuss and what we're going to look at is something that we look at all the time. And that is the fact that it doesn't matter the reason you enter the trade. It doesn't matter that you're trading a breakout. What happens next is up to the market and not in your control. And the reason we discuss that is so after you do everything that you learned in the basic 101, 201, and 301 in those courses, those levels, you see on any particular trade, it doesn't matter. That trade could be a winner or a loser. Just because you enter at that level, at that breakout level, doesn't mean it's going to be a winner. And that's so important. And even more important is that you don't gauge the result of the breakout. You don't use the result to gauge the validity of the breakout trade. You see statistically that it's profitable. But if you say you enter a breakout trade and it hits your stop, that doesn't mean you don't ever do another breakout trade. Let's say you do 5 breakout trades and 3 of them hit your stop loss. That doesn't mean you stop doing breakout trades, because if you were so lucky as to do 5 breakout trades in a row and they were all winners, you had 5 wins in a row doing breakout trades, you would be singing the praises of the breakout. But then you might hit a statistical patch where you might only win 2 out of the next 10 trades. Are you going to stop trading breakouts just because you hit that patch? Or are you going to continue on? Are you going to know that if you keep trading breakouts based on statistics over a long period of time, you're going to come out a winner? And do you really think judging something on the next 5 or 10 trades is valid? I mean, from a statistical analysis, is 10 of anything enough to make a decision? Not usually, and especially not in trading. I mean, you could trade it for a month and see what happens. Then you might have to go in and make some minor adjustments, or you might have to do a major, rebuild of your selection and entries. But it's just so important to know not to base your decision solely on the results. Of course, in trading, what are we talking about? We're talking about money. We're talking about profit or loss. And it's so tempting to make your decisions and your plans based on those results solely alone. No, you have to look at the execution. You have to look at the big picture. I mean, think of yourselves as being the casino, and you've got this game called Breakout, and you know that statistically over the long haul, you're going to be a winner. So you have to be able to go through those periods where over the short term you lose. But you know what? It's okay to lose over the short term. Why? Because we have money and risk management. We're making sure that any one trade doesn't take us out because the position size isn't too big, and the stop loss keeps us at our risk, which is the dollar or percent of our portfolio that we're willing to lose per trade. I mean, it's that simple. So let's say you're willing to lose 1% of your account per trade, okay, and you've got $1,000 account. So just to keep things simple, you're willing to lose $10 per trade over the next 100 trades. Do you think you're going to lose 100 trades in a row? If you're doing breakout trades, knowing the statistics, think about it. So let's just go ahead and look at what's happening. We can see the euro yen is still moving up nicely. Once again, those tuning in late, all the gaps have filled this week. So those gap traders are still making money. But remember, the gap trade's not a breakout trade, even though it could be, but it's usually not. In fact, technically it can't be, because if it gapped down here or it gapped up, it's not going to be a breakout. It's a directional bias trade. Okay, and you can see here the euro yen is maintaining above the daily open, but we're down for the month. And you can see here, there's the low of the first day of the month and the open of the first day of the month, right there, first trading day that is. But you see here, close to the end of yesterday, we broke out of the first day of the year's high. We broke out of that opening range. So there was a nice breakout. Okay, once again, we're over the open. You can see here I still haven't updated that. I got to do that. And we're still outside the range of January and February's high. Okay, breakout traders, the inside bar breakout. Once again, you can see here we had a breakout, and you can see how many times this has happened. So on those days, there was opportunities to extract pips from the market. And here you can see we broke out of the previous day's high, still only 63 pips, and the pound pairs are the only pairs trading in the 100 pip range. The holo, you can see here, there was a nice holo off the weekly H1 highest open right there, and there was the daily lowest open right here. So early in the Asian session, we put in that low and continued up. Okay, on the buy zone with the pivot point fade, you can see here we're looking short. Not much happened. That was either just a couple of pips or a scratch or a stop loss hit. You can see here, since we didn't hit the pivot, buy zone triggered once, twice, 3 times, 4 times to the upside. First one paid off, the last two, as you can see here in a Larry live trade, you're only up a pip or so. Rat zone at 6, with the range at 60, definite rat. So the green rats had opportunity, or actually the red rats had the first opportunity of the day. You can see here any entry in here paid off. Now the green rats, it's their turn, and you can see here they already got cheese once, twice, and they're on their third time taking the cheese. Once again, we missed that pivot. We took out the weekly pivot here. But the daily pivot, we do have a missed pivot. And you can see right here, we barely missed that pivot by 6 pips. We almost took out this pivot. We just missed that pivot by about 2 pips. And right now, for the month of March, we've had 3 missed pivots. Price action trade, once again, we will view this as a breakout. Price entered this range between 50 and 60. It's 126, 50, and 60. It didn't make it. It broke out to the downside, entered the 50, broke out to the downside, entered the 40, broke out to the downside, entered the 30, broke out to the downside, entered the 20. Then it broke back above, broke back down here, broke back below the 126.10, broke above 20, broke back down. So you can see here, if you think of each of these zones or these levels, these 10 pips, as areas where price will break out, you can trade those. Sometimes you get a little, sometimes you get a lot. But you can trade those as simple breakouts. And the wick zone, you see there wasn't much of an upper wick zone. It just kept cutting across. And you can see here the previous day's high. Price went up, came back through, but then broke out once, twice, 3 times, 4 times, 5 times. So once again, trading that upper wick zone breakout or just the breakout of the previous day's high can be very profitable. And you can see right now on the tick level, we're just moving basically within the spread. Einstein line right here. You can see there was a breakout, very small, coming back the other way. Let's see, I believe the breakout charts, we had a breakout chart here showing the real-time price analyzer. That's the H1. We can switch this back to the daily, and you can see once again high greater than close greater than previous high, only 26 times at the daily. And we were looking at the frequency distribution of the breakouts. I'll switch it back to the daily time frame. And you can see here a nice breakout. So you can see here, this is Thursday, Wednesday, Tuesday, Monday. You played those breakout trades each time. There was profit to be had. You can say that was a hairy hindsight, but now that we know this, we can do it on a regular recurring basis. And just quickly looking at the ranges, daily 63 and the weekly's 208. So once again, capturing reversals off of the weekly highs and lows of the current, those reversal traders, rat on the week, you can see there are pips to be made. And just the high minus the open and open minus the low. Once again, buy zone traders, you can see there are pips to be made on those breakouts and just the frequency distribution of the range. so quickly. It's not what you trade, it's how you trade it. Get out there and drain the banks.